the VA Interest Rate Reduction Refinance Loan, otherwise known as the VA IRRRL or VA Streamlined Refinance. My name's Evan Kaufman, WeVett Home Loans, your VA loan originator, here to help explain. So if you have a conventional loan and you have a VA loan, and let's say it's at the time of purchase, and they have similar interest rates, similar closing costs, for all purposes, they're equal at when you're going to help purchase that home. Why should you choose a VA loan over that conventional loan? A lot of folks think there's benefits to using that conventional loan instead. However, it doesn't have one aspect, and that's the streamlined refinance ability that a VA loan has. The VA IRRRL allows a military member to do a streamlined refinance, which means no appraisal, no income documentation, and a very quick speed to help lower their interest rate if rates improve in the future. Sounds almost too good to be true. No appraisal, no income documentation. That sounds wild. Why would that happen? Think of it this way. The Veterans Administration, the VA, tells us as lenders, hey, we're already guaranteeing that VA loan for the veteran if you can improve their rate, lower their payments, make their life better. Let's say the world went off the cliff and we need to help people cut their payments down and people are worried if they have equity in their home. They say, don't worry about any of that. No appraisal. We don't even need to verify if the income's there because we're going to help guarantee that loan no matter what. Go ahead, lower their rate. We're going to allow you to do it without that documentation needed. That's essentially where it comes from. The VA is really looking out for the veterans, and that whole aspect has allowed the VA loan to be a very low default loan because of it. So that's the big benefit. Veterans can lower their rates if rates improve without having to pay for or go through an appraisal, and then also have to document their income, which is just a massive benefit when you think about it. But there's three catches the VA gives us and says, hey, you got to meet these three things. There's a few other ones, but the big three that they tell us as lenders are these. Number one, you got to wait at least 210 days after the first payment. That's why for us, since we focus specifically on active duty military and veterans and VA loans is our business, we watch that extremely closely, meaning that at about the 6 to 7 month mark, we're reaching out to buyers and we're letting them know, hey, either rates are higher and you should be happy with your loan, or rates have gone down and you can do this VA streamlined refinance. It's a good call either way, to be honest. But the thing is, we watch it very closely because the VA says you got to wait at least 210 days after that first payment is made. Number two, the lender has to improve that rate by at least 0.5%. So if you had a 6% interest rate, we got to at least be able to pull that back to 5.5% or better. Now, this is one thing we want to make sure is clear. If you're watching this, if you notice rates have stayed flat or maybe even increased since you bought your home, if you had a lender that maybe got you into a higher rate, you still might be able to do this because every lender is going to have slightly different rates on this. Oftentimes, such as us, we're very competitive with VA loan rates. So that's all we do. Make sure to pass those savings through best we can. If you got your loan, even if rates have stayed flat or gone up, we might still be able to do that VA Streamline Refinance for you. So it's always worthwhile to do that analysis at that 210-day mark past your first payment and even a little bit before that. But they tell you, you got to pull that rate down by at least 0.5%. The third thing the VA says is, hey, you got to make sure that the veteran recoups their closing costs on that VA Streamlined refi within 36 months. Now, those closing costs are minimized. Title costs are typically going to be a little less. Our costs are generally zero or close to it. We really keep our lender costs down on that. You got to redo some escrow work. That's something to explain and go through just like you're doing a new loan product. But for the most part, your title's down a little bit. The lender cost should be dramatically lower, if anything at all. And then as well, you have your VA funding fee, but it's a reduced funding fee and it's waived if you have any VA disability. So overall, those closing costs are lower. But they say, hey, you better recoup those within at least 36 months. But I'll tell you, if you're improving your rate by 0.5% or more, that's generally not an issue at all because we're talking big savings in most cases here. So the VA goes overall and says, make those three things happen. You gotta wait at least 210 days past that first payment. You gotta improve their rate by at least 0.5%. And then you need to make sure they recoup those closing costs overall within 36 months. As long as those three things are hit, bam, we can do a VA IRRRL. That streamline refi is fantastic. I like to say it's your favorite Uncle Earl coming over. And here's the deal. If rates just slowly go down a little bit over time here, let's say it's a year from now, because here's the deal. You don't have that one time at 210 days to do it or not do it. You just have to wait until at least 210 days. So if rates aren't better or it's not really worth it to do it at that time, you just wait a little longer. You can do it at 300 days past, 400 days past. And here's the other thing. People ask me, Evan, how many times can I do this? Just the clock restarts. So when you do that refinance, The clock restarts on those 3 rules that the VA put out there, and you can do it again. There are folks, when rates were going down dramatically, 2020, 2021, and the start there, 2022, when rates were still low, there are folks that did multiple VA streamlined refinances. It's one of those beautiful parts of a VA loan. Hope this helped you understand that. Reach out to those questions on it, because when it comes time, the rates do actually go down, or let's say again, you just got stuck in a high rate loan when you first purchased, this is going to be one of the best things to help you take advantage of those lower rates and bring back those monthly payments. My name's Evan Kaufman again. Thank you.